Look, I think inflation, as you stated, is getting hotter and hotter as the year's gone on, and there seems to be no stopping it. So I think the question is, we already know the Fed's behind the curve, and the question is, at what point do they step in, or can they step in? And I think that's something that's up for debate today.
David, where do we go from here, though? Because the market is focused on who's going to be the next head of the Fed. There's that kind of swirling around here, but there does seem to be an underlying message that strategy is not going to change. So as much as some in the market like yourself may be unhappy with what the Fed's doing, you've got to live with the narrative that they're giving us. How are you positioning at the moment, given that we're also seeing an awful lot of frothiness in markets?
Yeah, no doubt, Jeff. I think, we've been positioned the same way throughout this COVID, which is, we've been long a lot of commodity names, especially, with our theme in energy, as you discussed earlier, with the massive amounts of underinvestment through the year. So, that's led to a perfect storm. And along with COVID, well, the stresses that have happened within the supply chain, and then the economy bursting out from COVID, we've obviously seen demand accelerate for goods and services throughout the globe, including energy. That's caused prices to spike. And now, as you discussed, we're starting to see more and more job owning to try to get prices lower. So we're staying with that commodities theme, everything from agriculture to oil and gas. And, the fund's doing well this year, up about 20%. And, it's a challenge because there's still true value in the markets today, even with all the dislocations abound. And it's becoming a bit, more cautious. You have to become more tepid because, as you described, it looks like the Fed is one move away from a potential disastrous policy mistake. And if so, that could derail the whole bull narrative here.
David, are you staying in this London-listed oil producer, Jadestone Energy? As you heard, we started the program talking about how Joe Biden now feels it's important to investigate whether the headline price of oil is being manipulated. Does that change in any way your view towards oil and gas companies?
No, not at all. I think he's very limited on what he could truly do. As you described, tapping the SPR, I think is a big mistake simply because it's a short-term fix on something that is going to have long-term consequences. Companies like Jadestone are oil producers, with lean balance sheets, with net cash position, and with a growing thirst of demand in Asia where they're focused. That's almost like the perfect type of cash machine. So, we're very happy in terms of Jadestone. And I think it would be, again, an error on judgment politically to try to look to, tap the SPR to get prices down. There's just a structural issue, as you know, with oil and gas, where there's been this lack of investment for years and years. Banks are turning off the spigot on lending, and investors as well have been more focused on capital returns. And I think those in the space, within the hedge fund land, especially who have been investing on some of these companies in the downturn, are starting to obviously reap the rewards of it. So I'm very happy in that respect. But I think all the things you and I have discussed in the past 18 months with the Biden plan and increasing stimulus dramatically, the supply issues that have bottlenecked throughout, and now with growing inflation, again, we're at a point now where you could see real, true policy error, and that could really cause the markets to see some downturn.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.